welcome everyone to our webinar about unlocking data, so transforming personal lines renewals with AI and automation. Today, hosting this discussion is Quandri President and Co-founder, Jackson Fregeau. Jackson, over to you.
Thank you very much, Tessa. Really excited to be here. Everyone that's here, thank you for attending the webinar. Hopefully this will be very educational and you'll walk away having learned something from probably Chris, maybe not myself, but I'll see what I can do. For those of you that don't know me, my name is Jackson Fregeau. I'm the co-founder and CEO of Quandri. Have been running Quandri for the last 4 years or so. So my background was originally in working in a number of different startups, had built an automation program in that company, and then had taken that, sort of applied that to the insurance industry and iterated from there to build Quandri as we know it today, which is a renewal intelligence platform for the insurance industry, and specifically for insurance agencies and brokerages in Canada and the US. We'll dig in a little bit later and walk through, specifically what Quandri does for anybody that's interested. But I'll leave my introduction there. I'll be hosting the webinar, and I am joined today by Chris Paradiso. Chris, thank you very much for joining us. Really looking forward to the conversation. I'll pass it to you to give a quick introduction before we get started.
Sure. Thanks for having me. Happy to be here. I'm an insurance agent owner or a broker owner coming from Canada, right? Here located in Connecticut in a small mill town of less than 12,000, 11,800 people. We do write in 44 different states, which allows us the capacity for growth when you cover that many states. We do have some specialty programs. We are one of the largest FedEx insurers in the United States. So we insure FedEx contractors. That's one of our major niches. Another major niche of ours is manufacturing. And a third niche that we have is farming. We have about 83% of the revenue comes commercially for our agency, and about 17–18% comes personal lines. And we roughly have about 9,000 clients. So it's a little bit about Paradiso Insurance. And I've been in the industry since 1998 on the life side, and shortly thereafter transitioned into the property and casualty, and been licensed now for 24 years.
It's great. Thanks for the background, Chris. And what brought you into insurance?
Well, it's not a real sexy story. The gentleman who founded the financial needs analysis, his father who founded it, died a very wealthy man, but his son and I played on the same basketball team. And at the end of high school, he said, I know you're going off to college. Your dad said, yeah, you want to go play ball. After you're done playing basketball and after you're done with college, please give me a call. I think insurance is something that you do really well at. So when I got out of college, I was transporting prisoners. I ended up giving him a call, and we went to lunch, and he gave me 4 key people to call, 4 companies. I got hired at all 4. Went back, said, hey, I want to go to Phoenix Insurance Company. A lot of Italians. I merged. I feel like a part of the family. He looked at me and says, call him back and say, no, you're going to New York Life if you want to stay in this industry. So I did. I listened to him, and he planted a seed. He says, but remember, call me in 3 years if you succeed. Only, less than 0.5%, 99.5% are going to fail. So you're probably one of them. Well, that hit me right in the nose, because people that tell me I can't do something, I'm not going to succeed, is an extremely driving force. That's how I ended up fighting through, hating the first 2 years of it, and couldn't quit.
And do you attribute part of the reason as to why you persevered through that as to him telling you you couldn't do it?
No question. A great book that talks about this that hit really home is Choose Your Enemies Wisely by Patrick Bet-David. Trust me, read that book, have your kids read that book, and that is the truth. And that's what drove me. Not that I loved it. What drove me is somebody told me I'm not going to succeed and I'm not going to make it.
Yeah, it's really interesting. Hey, I think you hear a similar story for a lot of people who've done, who've gone out and done great things, that it wasn't like the intrinsic motivation of like wanting to necessarily achieve this thing for your own purposes. Somebody telling you like, hey, you're not good enough. You can't do this. You can't, you can't dunk, you can't shoot that three, whatever that thing might be. And like that spark grows within you to just like fuel this fire. From my own experience, when we raised our first investment round, our seed round, this was when, the business was basically my brother and I, we'd been grinding it out ourselves in my apartment for about a year and a half. And I kept all of the initial rejection emails that we got from investors saying, your business is never going to make it because of this. Your business is never going to make it because of this. Every once in a while I go back and look at them, and it still gives me that sense of motivation, right? It's like, well,
I would recommend for you to post those right by your bed when you wake up in the morning.
Mm-hmm.
Nothing drives you more. I still have a sign that I wrote over 20 years ago that said, "You ain't going to make it." And I listed his name. I look at it every day, still see it almost every day.
Yeah, interesting. Well, let's jump into the insurance talk. So I want to start fairly high level, Chris, and we want to focus, primarily on the personal line side of things. So when you're looking at, personal line side of your business, personal lines market at large, what are some of the just high level trends that you're seeing? Are some specific challenges and opportunities that stand out to you?
Well, I think the trends have changed in the last 12 months during this real swift, almost like a storm of hard market that blew in. The number one pain point we have, Jackson, is renewals. The increases have been tremendous. We've not seen increases in the United States. Remember, I do write in 44 states. So this isn't like a New England thing or a Midwestern thing. This is a whole country issue. The pricing is number one. The increases are tremendous. Number two, I've never gone into a market or ever thought that we would be an insurance agency with 28 different personal lines carriers, and we almost have no carriers that want to write new business. So think about going to a grocery store. You want to go pick up some groceries, and you walk in the grocery store, and there's almost nothing in it. It's scary. So that has been a tremendous, trend in the last 12 months. And last but not least, I would tell you, the handling of claims seem to have been very delayed and very dragged out, which brings frustration to our clients, especially those that are in need to get back in their home or back in their car because they only have one car. So those would be the three major issues. I would put, for an independent agent, one of the biggest is the amount of legwork and follow-up work that our in-house staff has to do. Our customer service people inside of our office, having to pick up the phone, spending 30, 40, 50 minutes on the phone with a billing issue. That is something that's extremely costly from an agency owner side.
Yeah, makes sense. So I want to dig into some of those. So when you look at the price increases, carriers taking rate across the country, or not actually writing that business, is that something that you see coming starting to come to a close? Do you see that continuing indefinitely for a couple of years? Like, what's your perspective on that, since you write all across the country?
My perspective is, I think we're going to see some easing possibly in Q4 of 2025. The reason why I say that, and I say some easing, there's still a major issue in the United States, and I believe it's probably worldwide, is building rates. Supply rates are extremely expensive. And if you look at reinsurance last year, they came out ahead by about 10 points higher than what their expectations were on a national level. Once again, the reinsurance seems to be having a winning year. So it'll be interesting to see on how much longer the hard market will stay here. Even when I think it's going to shift, I still don't think it's going to get as easy or as smooth as it was, just 2, 3, 4 years ago. I think when the harden and softens, it's still going to be a medium to hard market. And I do feel we're probably going to stay here until late 2026, my personal opinion.
And do you see that being, so there's obviously the cost cost of building, cost of supplying for things that need to be built. Is that in large part driven by like increasing natural disasters and the severity and the cost of those, that you see that continuing for a longer period of time? It's just hard, like that a carrier can't take as much rate as they need in a short term, so they need to spread it out over a 2, 3, 4, 5 year basis.
And I think some of this has come by the insurance departments. Here in the United States, rate is all regulated. So carriers have to, process what they propose as rates to each state. So Connecticut, Massachusetts, they all have different insurance departments. And when you propose those, some states allow you the rate you need and some states don't allow you. So where you see the differences is really based on regulations. So a lot of this is political. So I think some states are going to soften quicker than others. And I think it's going to be where the states that allowed for larger rate increases sooner than waiting for carriers to really get in the hole and then say, hey, if we don't take this rate, we may be out of business or we're shutting down. So I think that's what we're going to see. We're not going to see all the carriers at once. I truly don't believe that. I think certain states, it's going to soften, Florida, it's not going to be a soft market. It's a hard market. And I think they're 3 to 5 years. They have to hope and pray that they have, no natural disasters, no hurricanes, no big storms, and that some carriers make some money. Because remember, you got 12 carriers that have gone insolvent in the last 18 to 24 months, just in the state of Florida. You have issues in Texas. You have issues in California also. You got wildfires. Who would ever think wildfires would be here in Connecticut? Up until today, we really had 89 straight days with no rain. That is the longest since we've been tracking. So, natural disasters are definitely going to play a role if we have them. Let's keep our fingers crossed that it calms down.
Yeah, and you get sort of the play on the two, right? When you have those and you can't take the rate, it extends that out. So good, interesting. Yeah, so in some areas, expect to see that softening sort of coming into the end of next year of 2026. Other areas go a little bit, continue on further. But even with that, that's another year of a hard market. Yes. So want to talk about that a little bit, Chris. So, over the last, I guess really it's been 2 years or so that this has been existing. You're thinking, another year at least, if not longer. So this is a year where customers are seeing very large price increases, more difficulty getting their, claim serviced in a timely manner. Obviously more of a workload on you as an agency owner and your staff, because that's more people calling in. That's more emails you need to send, more servicing work, right? So I know that in your agency, you really prioritize a high level of client service, right? You really care about your clients. You care about delivering a good service. How do you continue to do that over, this protracted period where you need to deliver much more service to your client base? How do you do that with the same amount of staff? Do you need to staff up? Like, how have you managed that process? How do you expect to manage that over the next sort of year or 2 years?
So we run very different, and I know everybody can say that, right? Well, we're different. Well, you
guys really are, I guess.
We personally believe, and I know there's going to be people that say, Chris, I think you're a little crazy. Wouldn't be the first time someone told me that. We believe in being overstaffed. The only way we can grow is to be overstaffed. So we maintain the way we are staffed is to be overstaffed. And if we have somebody moving on, either retiring, which we've had, or deciding this isn't the industry, they're moving on. We're already overstaffed, and we're also interviewing every single week, whether we're looking or not. We take a little different focus, and what we truly try to hire is, even if we're overstaffed and we find somebody who is dynamic, we'll still hire them. There is no reason to let extremely good talent. If it's just average talent and we're overstaffed, we're not hiring. But if we identify somebody and we say, this is a rock star, we're going to hire you even if we're overstaffed. And I think that's what allows us to be able to get through what we're getting through right now, which is there's a lot of angry clients. People are, going to grocery stores, they're taking 40, 50% increases. Then they get their, homeowner's bill, their auto bill. Once again, they're taking 20, 30% increases. So people aren't happy to begin with. And who the heck likes to pay for their insurance until they need it? So I can't really answer that other than our strategy is to be overstaffed. So we are prepared to take more calls. We are prepared for an uptick in business. We are prepared when we're buying an agency, when we need to do some shifting of, all the different processes. When you buy a broker or buy an agency, there's a lot of work that goes behind it, merging it into the AMS system, whatever system you have, along to the technology and all the different details that comes along with purchasing. The reason why we're prepared is because we maintain to be overstaffed.
It's an interesting approach, and it's a self-fulfilling prophecy in a way, right? And I think that exists a lot in business where, if you're sort of making those investments because you expect that growth to happen, then that growth is going to happen because you're making those investments, right? It's the kind of dog chasing its own tail. Where if you're not making those investments in the first place, and that opportunity comes up, and you're not able to take that opportunity, then you're not going to see that growth. Which I guess some people would look at that as taking taking more risk on in your business, or potentially being less efficient. But if it allows you to capitalize on that growth when other people can't because you have people ready, then that I can see how that's advantageous.
But I also want to give you the flip end, Jackson. Not everybody is in growth mode. Some people say I'm in growth mode in 3%, 4%, 5%. You don't need to be overstaffed the way we are. And that's okay. There's no right or wrong answer. To the question you asked, it's a very easy answer, only because we're looking to grow 15, 20%. And a good portion is going to be organic, but another portion is going to be by acquisition. And in order to get there, we need to maintain that staffing be above and beyond by a minimum of 10% if we want to get there. We understand that, and that's built into the cost. So at the end of the day, we make a little less money, but I can promise you one thing: we're going to service the heck out of our clients.
Yeah, interesting. That makes sense. So let's talk about that side of things. So, you prioritize service. You have the people to do it. You have lots of angry clients, right? People are seeing price increases at the grocery store, in their homes, rent, basically everywhere, right? Like people are spending more money. They're seeing 20 to 30% increases with their insurance. How do you manage that? How do you deliver a good client experience? What is the role that you see of the agency and of your staff when these customers are pissed off and they're upset with their renewal? How do you handle that and drive good client experience, drive good retention?
Number one, proactive. You got to be proactive. If the agency or the brokerage isn't proactive, you're going to have significantly more angry clients. You can limit that amount of anger if you have a proactive strategy, number one. Number two, I think training is critical. We spend time and we utilize Mick Hunt and his team at Premier Strategy Box, and they've come up with some training. It's called the Angry Client Training, because we want to be prepared on our response, both by tone of voice and by actually seeing you. Because in some cases, we're actually setting up Zoom or Google Meets or whatever it might be for an actual meeting. And in some cases, we also do have walk-ins and people that set personal appointments with people. Right. So being able to control and train for that has been absolutely critical, because the way we respond is going to be whether we save an account, we take care of account, or an account's going to leave us. So I would assure you, being proactive is number one, and number two is you got to invest in training. Your team needs the training. We're in unprecedented times. People are downright angry when they're calling. Flat out, they're angry. Understandably so.
Yeah, and let's dig into that piece. So let's say, I'm an angry customer. I call Chris. I say, what the hell? My premium's gone up by 25, 30%. What am I paying you guys for? Blah, blah, blah. What does your staff say to me? Number
one, Jackson, I feel the same pain you feel. And in my personal case, I have twins, and I added them to my auto policy. Hey, Jackson, What do you think I pay for my auto insurance on a yearly basis?
Probably 20-30% more than you did last year.
$11,800. It's
Wow.
almost unaffordable.
Wow.
Who would ever think it would almost be $12,000 for me to have my 2 children on the road? So I feel your pain. Number one, we have to have empathy, because as bad as it is for you, Jackson, it is bad for us too. We're feeling the same pain you're feeling because we are being affected on our policies. Number two, what we would love to do is do an account review, Jackson. Let's see if anything's changed on your account, on your auto, on your home. Let's just see. So let's talk about your cars. Do you have the same cars? Let's look at coverages on the cars. But most importantly, when we talk about the home, we really dive into deductibles. Hey, Jackson, in the last 5 years, have you had a homeowner's claim? Let's just say you say no. Right now, we have you at 2,500. Here in Connecticut, the first company, which is Hanover Insurance, which you have Travelers, Hanover has now changed and has been accepted by the Connecticut State Insurance Department. Everybody who has 750,000 of coverage, Jackson, on their home is automatically, if they don't have a $2,500 deductible, is being changed to a $2,500 deductible. Anybody from 750 to 1.5 is being changed to 5,000. Anything from 1.5 or higher is being changed to 10,000. The reason why I explain this to you, Jackson, is because I think we need to start to look at higher deductibles, because no matter what, over the next 24 months, I personally feel all the carriers are going to be shifting. We might as well shift before then. We don't want to put in small claims for one reason, Jackson. What we're seeing is with a home insurance claim, no matter how big or how small, we're seeing a lot of cancellations. Not the norm 3 years ago versus today. Significantly more. We don't want to be in there where you're being canceled because you had a $5,000 claim. Now, if you have a house fire, Jackson, and you have a $100,000 loss, that is understandable. That is an accident. But if you're putting in these small claims, we're doing a lot of harm to your next 5 years of your future insurance premiums. And we don't want to do that, Jackson. I end with, once we do the account review, let us go back and see if there is another carrier that might be the right fit at the right price with the right coverage. We never want to say the word shopping. Let us go shopping for you, because we are not at the grocery store. We are talking about your livelihood, Jackson. If you get sued and you're in a car accident, we're talking about your future income. We're talking about your savings. If your house burns down, we're talking about your second most valuable asset you have. The first asset is the ability for you to work and make income. The second asset is the home you live in. We don't want to jeopardize that on.
Yeah, interesting. I mean, it worked on me. Interesting. So
it doesn't work on everybody, Jackson. It works on our ideal client. Our ideal client, we have standards in our agency. We're not selling any state minimums or even close to state minimums that are required. Those are the people that are purely out for price and nothing other than cheap. And those are going to land us in court because they're not going to have enough insurance. They're going to get in a bad accident, and then they're going to sue the agent.
And that's going to come back on you.
That is not what we're looking for. We're looking for an ideal client who wants to be educated and get professional advice on their insurance needs.
Yeah, interesting. So when you look at that, just so I can break that down a little bit for the people listening, really you're sort of leading with empathy, right? You understand them, you're in a similar position, show them that you understand their policy, that you understand the account, do that review, do that work, and really like add value to the client, right? Like understand the policy, understand the account, and then using your expertise and your understanding of policies and markets of like adding value to where they are. And then if you need to, the last step would be looking at alternatives, but really moving down that chain so that they understand that you're doing. And I think what people want, like what we see is that what people want to know, like surface level, sure, they'll get upset about a rate increase. What they want to know is that their agent is doing the work, right?
Yes.
That the commission that they're paying off that policy, that the person who's getting paid, that they're doing the work, they're representing them, they've got their best interests. Like you have to pay insurance. If it's increasing, it's increasing, but they want to know that that person is there for them and they're actually paying for something, right?
The standards aren't high today, and I'm just going to take some people back. I'm amazed on how many AORs or BORs we get. Those are broker of agent records. So we've just gone through coverages, Jackson. I've just sat down with a guy, a gentleman who we have all their business insurance, and he was frustrated, and I sat down with him. His homeowners was $8,000. Okay. And his auto was another 4,000 or 5,000 with an umbrella. It was a $15,000 account. He couldn't get his agent to return a call. He called 3 times. I said, Bart, how long did you call him? He says, I've called over 3 weeks at least 3 times. And I should say I probably called him 20 times. I said, Bart, when you call me 20 times in a day. He says, yeah, but I only left 3 messages. So he's 68 years old, frustrated, doesn't understand why his, what we dissected was, hey, I'm not sure I'm going to be able to do any better on your premium, but there's things on here that I would highly recommend that we look at, and you choose whether it's right or wrong. Number 1 was the deductible. And once we got onto that deductible, he was like, well, I didn't even put this claim, and I didn't put that claim, and I would never put a small claim. At the end of the day, I listened to him. We walked through things. He signed a BOR over to me. It's going to come in, and we're going to make the changes. And the number 1 thing he said is, when we left, is, I feel better that you listened to me. And at least I understand now why some increases were taken. And it doesn't make me feel any better, but it makes me feel better knowing that you're gonna at least reach out to me and listen to me and make sure I have the right policy with the right coverages. I didn't save him any money. I took over the same carrier as he had. I returned his call and I said, with somebody like this, I make it a point, I want to sit down with you. He's 68 years old. Understand your clients. The older clients want to sit down with you. Granted, it's not always. If I'm running out for a $1,000 account, I'm not going to be running all over the state for a $1,000 account. This gentleman already had $100,000+ of business insurance with us. He really liked his agent, and that's why he didn't originally move it. And then he was very frustrated this year. Can't get returned. And I think what's happened is, I think a lot of agencies and brokers have cut back on staff.
Yeah. Well,
and that cutback is causing some of these aggravations.
Yeah, and let's dig into that, right? So you guys prioritize. You mentioned it a couple times, right? The service proactivity on the renewal process, right? Of getting to your clients before they come to you. We see a lot of agencies. We see agencies that do that, but we see a lot of them that don't. Say they look at their renewal process as maybe a necessary evil that they have to do, but not as this opportunity to add value and really drive outcomes for the client and really drive outcomes for their business. So why do you think that is? Like, why do you think you and other agencies like you have such a different approach on like the service and the renewal compared to other agencies? And what are those other agencies focused on?
The number 1 reason is my father was a prosecutor and also an attorney, never in the insurance space. But he taught me a lot about insurance because he taught me about what he liked. And the number 1 thing that he liked was being proactive. His agent would reach out to him, and on occasion he would sit down with him. That was number 1. The number 2 thing I think that's critical is never have a machine, press 1, press 2, press 3. I know that's going to turn some people's stomach. The larger agencies love that. We're no matter how big we get, we're not going to do that. You're going to talk to a human being, number 1. Who likes to call a doctor is press 1 for his, press 2 for this, press 1 if you know that. There's nothing that's more aggravating. And I think if you can remove those tedious little pain points, I think that opens the door to a lot of opportunities. And I think, a saying we say around here is, because I said I would. We said we're going to reach out to you and do an account review, and we're going to do that. And that communication is critical. Insurance, if you want to be a successful agent, the easiest thing I can tell you, there's one skill you have to do. It's the same as a politician. Communicate, follow through, follow up.
It's the simple things that are not necessarily easy, but it's the simple things that often lead to a lot of success, right? And I think of that as one of them. I think of that in our business a lot too, like ownership, follow through, right? said
Yeah.
you're going to do something, so you do it. And it's simple to do that, but that doesn't mean that it's easy to do that. Like, it can be very hard to do that, but it's a simple tenet that you need to follow. So question for you on that, Chris. So you guys, you prioritize that proactivity and, providing a good experience there. What does that do for your business? So like when you look at this through a, more of a sort of metric or like financial driven lens, you're doing it because it's the right thing and you're delivering service for clients, but you obviously must believe that also yields a better outcome for your business, I would think. So when you think of that sort of proactive renewal process, proactive outreach, why do you do that? What sort of outcomes does it lead to in your business?
Number one, and I know this is going to sound greedy, you sell more products to less people. Right? If I have a client, we don't sell monoline business. We don't believe in monoline business. Somebody calls for an auto quote. Sorry, Jackson, we can't do an auto quote. But what we can do is, do you own a home, Jackson? You say no. Great. You must be renting, right? Yes, I'm renting. Great. We'll do a home and renter's policy for you, but we can't just do an auto quote for you. So we do not do monoline business. And we don't do that because why would you allow an opening for another agent or broker to get in there? So we like to sell, if I sell you home, auto, and umbrella, and you have a motorcycle, a boat, or life insurance, or a business, why should we not take care of all of that? So we really hone into cross-selling. So first of all, we don't sell any monoline business. So we've already cross-sold you. But as we do an account review and get really proactive, we find out we have some AI products that also identifies Jackson's got a motorcycle. We don't insure that. So as we call out to be proactive, there is AI products that are helping us identify, you have a boat, you have a motorcycle, you have collectors figurines or whatever, collectors coins. It actually helps us identify other things that you might have that we must insure. Watch collection. Those are just a few things. So we want to sell more so that we don't want to have, I don't want to get to 100,000 clients. I would rather have 10,000 clients and we average 4 or 5 policies per client versus having 100,000 clients and only having 2.
And, and for my own knowledge and everybody listening, why, if you are being proactive with that account, are you able to cross-sell more than, if you just dealt with them when they called in? Why does that yield that result for you guys?
Number one, clients unfortunately don't think of what they need. Right? So I had a client, and this is going to blow you away. Got through the internet. She came in on a Saturday. She loved that I had Saturday hours, sat down with her, wrote a home and auto with her. And she said, oh, it's a starter house. It's on the lake. I have another house. 9 months later, 10 months later, we start the account review. We send an email. She responds. I schedule a call with her. And she says, Chris, it's Lisa. Great hearing from you, Lisa. So now that summer's over, did you enjoy your summer home? No, actually, Chris, we knocked it down. I said, you did what? She says, yeah, we knocked it down. Remember, I told you it was only 750 square feet. We're building a 2,000 square foot. I said, well, where are you? She's like, well, we're about 4 months into it. Great. Did you buy insurance for that? She said, I already bought insurance from you. It's almost been a year. Yeah, Lisa, that you don't have insurance for that. And she's like, you're kidding me. And I was like, how the heck did you ever get a loan? Oh, I did a home equity. Kidding. They don't even know it. I'm like, there is the example. Perfect example. We sold a builder's risk homeowner's policy. God forbid she ever had a claim. She did not have the right coverage. She built, a 2,000, ended up being a 2,400 square foot house from 750. There's a perfect example of why we need to be proactive. That's only one. I could give you many, many, many more, but that's one example.
Yeah, to get in touch with the customer, understand what has changed, to be able to tackle those changes.
Think about what happened to you, Jackson, during COVID. Did your life change?
Astronomically.
Yeah. How many people got dogs? How many people got campers? I mean, campers in the United States, they had to grow by 2,000–3,000%. It is crazy how many campers people have purchased. Why? During COVID, you're isolated. Well, what happened? They got campers. Why? They can get out of their house and freely reign, and it changed people's lives. So I give you that example because think about your own life from 5 years ago, pre-COVID to today. Every one of our lives changed. And by every year and annually communicating, it's amazing what we learned about our clients and how their risks change and how so many other things. Number one thing I think was dogs. I mean, it was astronomical on how many people got dogs during COVID.
Yeah, interesting. That all makes sense. When you think of, like, I know the renewal process for you, Chris, is really important. You know, you talk about this in other forums. It's a core part of your business. Proactivity, one
Yes.
side of it. What are the other sort of core pieces of the renewal process that are important to you guys at Paradiso? And why do you engage in those? Like, what does it do to your business? So cross-sell, upsell is one side.
Yeah, but even before the cross-sell, we have to be honest. Did we get in this business to protect people's livelihood? You know, I love to see 15 is going to save you 15. 15 minutes is going to save you 15%. We don't get into the last time you went to a doctor, Jackson. Did you ask your doctor, do you have a 15% discount? Now, why don't we ask our doctors for a 15% discount, but we think we're going to get a 15, 20% discount in insurance? Because unfortunately, the value isn't there for some people, right? The value's not there until you're in an accident and you're sued and you don't have the coverage. The value needs to be there. So I got in this business to protect people's livelihood. I call it, I'm protecting your American dream. And we put that everywhere. That's our goal. So the number one thing, yes, account rounding is critical, but how about if we just care? Do I want Jackson to be sued and lose and become financially in trouble because we didn't sell and we didn't advise? I shouldn't say sell, because we don't sell here at Paradiso Insurance. We want to educate you, Jackson. We want to share with you what we feel would be the best for your situation. But at the end of the day, Jackson, we want you to choose what's right for you. That's the number one reason we need to be proactive, is we need to understand your situation in order to properly insure you. If we don't ever hear from you, I can guarantee you we're missing something. We're not doing a great job.
Yeah, and I think that's definitely the right approach to insurance, to do it for those reasons. I don't think of a lot of agencies operate the way that you all do, Chris, but I think that's a good way to approach it.
But I would challenge those that think differently, and it's okay, because I think different is beautiful. That's what I love about this industry. Think about retention. Retention is the foundation of your home. I don't care how you build your home, Jackson. Retention and retaining business is the size of your home. It's the foundation of your home. If you focus on that, you'll build a bigger home. That I promise you.
Well, I think that's a good place for us to wrap, Chris. We covered a good amount of ground, and I think everybody here probably learned a few things. I definitely did. So I appreciate you digging in, sharing with us, you know, your philosophy on insurance, what you guys do at Paradiso. I think you guys, you're a unique business and have a lot to share with everybody. So appreciate you coming on and doing that today. We have, what I will do here is share my screen, because what we want to do is just walk through, for the people that don't know Quandri, is just share a few minutes who Quandri is, what we do, for anybody that wants to learn a little bit more. So I'll pull this up on my screen here. Lovely picture of Chris, who you know. But who is Quandri, and what do we do? So Quandri is a renewal intelligence platform. So obviously, you know, we're talking a lot about renewals today. Where does Quandri fit in? Effectively, what Quandri's platform does is we ingest all of the data upon a renewal. So policy data, underwriting information, claims data, communication data, all of this sort of account review data that Chris is talking about. We take all of that in, We run that against sort of carrier eligibility understanding, and then provide insights and recommendations back on every single one of your personal lines policies, showing a summary of that renewal, upsell opportunities, cross-sell opportunities, missing discounts, potential E&O risks in the policy, and just opportunities to add value, right? If there's a missing discount that they could qualify for, flagging that so you have that opportunity to add value. And what that really allows your team to do is, instead of spending all of that time doing those manual account reviews, they now have that data, they have those opportunities flagged for them, so they can spend more time driving that proactive renewal process and having that data already completed for them. So really it helps you turn your renewal process into something that is more data-driven, more automated, and more intelligent, allowing you to be more proactive, like Chris was talking about, which then drives more cross-sell and upsell, more retention, while spending less manual time needing to do those in-depth reviews. The initial product that we have is AI-powered policy checking, which accomplishes all of that. That is the plug for Quandri. If anybody does want to learn more, you can scan this QR code up on the screen here, or just go to our website, quandri.io. You can chat with anybody on our team to learn a little bit more about what we do. Chris, thank you very much for doing this with us. This has been super educational. I learned a lot. I'm sure everybody in the audience did as well. Appreciate you sharing your learnings and insights with the broader ecosystem. I know you do it a lot, so thanks for doing that with us today.
Love to share. We get better together.
Yeah, absolutely. Everybody, thank you for attending our webinar. We'll be doing more of these on different subjects. So if you enjoyed this one, sign up for the next one that'll be coming out. We'd love to have you and love to answer your questions. So thanks a lot, everybody, and have a wonderful rest of your Tuesday.